Everyone. This is Vijay from the Investing Education channel. Today we're going to talk about DLocal. DLocal is based out of Uruguay. They're headquartered in Argentina, but they work globally. DLocal went IPO maybe last year or maybe a year earlier. Very interesting fintech startup. What they essentially do is, as you can see, they have a one API. API means application programming interface, one platform and one contract for their merchants. And they're very similar space like Adyen, which we saw earlier in our channel, in the sense that they try to land and expand their clients and add more payment methods in different countries, because different countries have different payment methods, regulatory norms that fintech companies have to abide by. So this is where they play. And if you see that Q2 results has been excellent, 319% growth in TPV. This is the transaction processing volume, landed at $59 million, 186% revenue year-over-year growth, 44% EBITDA margins, which is fantastic. In terms of if you see the scale, they've been consistently growing. Of course, if you see the revenue growth, it's just growing even now, like went from 88% to 124 to 186%. And retention NRR, most of these companies are measured on net retention rate, which is basically saying that they have a good NRR, net retention rate. And then the profitability, they're consistently at 44%. That means they're monitoring that profit margin cautiously. The other piece is what problems are they solving? They're trying to solve the local payment methods because there's so much fragmentation. One can do cash on demand, for example, in India. You can do probably digital currency in some other emerging market, or you can do debit or credit payments. So these are interesting payment methods that they address. And in terms of conversion and high fraud, they also work with merchants directly and through e-commerce platforms. And they have one platform to ensure that frauds are reduced. And the other piece is this regulatory norms I said earlier. For example, India introduced the goods and services tax, GST, and Brazil had a tax reform recently. So changing all this becomes very complex if you are a merchant. But being a fintech player with this clear focus on helping their merchants do well, they keep upgrading their product. So how does the product look? So if you see what they essentially do, very similar to Adyen, is you have all these local credit cards, alternative payment methods, your bank deposits, and this is how the emerging market users are on one side, because they're targeting those 30 odd countries right now. And then you have the global merchants on the other side. So what they do is it goes through the banking financial institution, and then of course they do routing, processing, tax collection, forex management, because if you're an international company like Uber, but doing business in say Germany or UAE or Dubai, India, or any other country, how do you do that? And then the merchant fund settlement, that's called pay-ins. What consumer or what another business owes to a merchant is handled by DLocal. That's called unpaid to the merchant on this side. That's pay-in. The opposite of this process is payouts. The merchants pay out if they owe in terms of credit or debit to a business or a consumer. And it goes through a similar process through the local bank, through the digital wallet of a consumer or a bank deposit for a B2B customer. They also do direct issuing of cards. So this is where they help merchants do fund collection, program management, all the way through prepaid cards. So essentially their goal is to become one platform, one API, one contract. So for example, if I'm a merchant, I want to go global, I'll sign up with them because it helps me to expand into different countries in terms of managing the pay-ins and payouts. So they have strong industry tailwinds. Of course, Still, the retail commerce is very high, but we are all doing a lot more e-commerce, if you will. Online shopping increased post-pandemic as well. The continued rise of digital economy, more and more folks are using digital wallets to make payments, cashless payments, cardless payments with Apple Pay, Google Pay, so on and so forth. And then a growing emerging market. Of course, the war has put a little bit spin with, in addition to the inflation in US. So, but still the spending power in the emerging markets is increasing with an aspiration to brands and merchants. And merchants increasingly want to do business in emerging markets, which has always been the case since the last decade or so. And then, of course, the complex and evolving local regulatory and local tax norms that one has to abide by. This becomes very complex for merchants to manage, where DLocal can make a play. So if you see, they are saying that the addressable market is around 1.2 trillion. In fact, we saw that PayPal did 1.4 trillion in TPV itself. So DLocal is more focused on the emerging markets, excluding China. So they're betting that market is around 1.2 trillion. So that's a massive market to go after. They're expecting a 27% CAGR growth from 2020 to 2024. The vectors of growth, the way they want to grow is, if you look at it, they first focus, of course, on the commercial effects. They have a slide where they talk about their pipeline, but if you see, they improved the net retention rate to 196%. Revenues from new clients grew to 26 million, and then they completed an acquisition of Primero Pay. So a lot of good things happening organically, land and expand. They have enhanced some of the products in terms of fraud and data capability. That was the other piece, and added the GST in India and the Brazil tax changes. They added new geographies, Vietnam, Malaysia, and Guatemala. So they're expanding their network. So these are the three vectors of their growth. And you can see from a commercial perspective how they are growing. They have no churn. And then the contribution of the 176 or 186% NRR that we saw previously is coming from these different attributions. So there's no churn. They're organically growing existing merchants. They're increasing the wallet share wallet. The number of products introduced by merchants is increasing. That is increasing the TPV. They're increasing the number of countries where a merchant can go and do the business, and the number of payment methods a merchant can do. So all this is attributing towards NRR, and it's become very difficult for clients like Rappi or Kuaishou or Microsoft to walk just out of the way. So that's kind of interesting. So we saw this. We'll skip this slide. If you go to vector geography, you can see they're rapidly expanding, and to all these emerging market countries. If we predominantly see this, some of them are Latin America, Middle East, Latin America. You see India and Africa and Latin America, and we see East Asia, Africa again, and Latin America, and a lot of Africa. So a lot of growth in the emerging markets. So different segments they are targeting. That's what they're talking about. So there's a risk diversification in terms of where the revenue is coming from. So right from retail all the way to gaming. So that's a good sign that their customer is expanding across different segments. In terms of TPV, you can see that they've grown tremendously, 319% year over year, from 348 million to 1.5 billion. So that's a tremendous growth. Still, this is a growth company, I think. And in terms of revenue, they have grown 186%. So this is the revenue that goes into the pocket of DLocal shareholders, right? So they grew from 21 to 59. So if you divide this numbers with the previous slide, TPV, you'll kind of get the takeout rate. And in terms of EBITDA margins, you can see they consistently want to maintain about that 40% margin. So the 39% dip during 4Q 2020, but that's what they're aiming at. So which is a good sign. So we can expect that they continue to grow, add more TPV, more revenue, and keep the margins at 44%. That's fantastic growth story here. We talked about this NRR, so we'll skip this slide. They're consistently improving the merchant engagement. How? They helping the merchants move into different countries because they offer those offerings in those different countries. They also offer different payment methods per merchant in those different countries. So which is fantastic. So there is, if you see per country per merchant, it's number of countries per merchant is 7 that a merchant is working in. In terms of payment methods, is 62 payment methods per merchant that a merchant can leverage using DLocal's platform. So in nutshell, they're API-based product company focused on enterprise sales to merchants and targeting the emerging markets ecosystem, which is very interesting. So let's look at their quickly. Let's look at their share price and see where it is currently landing. So it's around 22.94. You see the market cap is around 7 billion. The PE ratio is still high. But if you see this trajectory of revenue, it's green. So the revenue is 244 million for 2021. Net income is around 78 million. So it's positive. So as I said, their aim is to consistently maintain that 44% EBITDA margins, and they want to keep it green. They have good cash reserves, around $36 million in cash. So pretty good company to look at and add to the portfolio if there is any correction or otherwise. Thank you very much. And if you liked this episode, please share with your friends and family, subscribe to this channel, and give it a like. Thank you very much.